Ladies and gentlemen, good day and welcome to DLF Limited's Q1 FY26 earnings conference call. Today, we have with us on the call Mr. Ashok Tyagi, Managing Director, DLF Limited, Mr. Sriram Khattar, Vice Chairman and Managing Director, Rental Business, Mr. Akash Ori, Joint Managing Director and Chief Business Officer, and Mr. Badal Bagri, Group CFO, DLF Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Badal Bagri. Thank you, and over to you, sir.
Thank you, and welcome to the first quarter earnings calls for financial year 25-26. I'll just start with the key highlights before we start our question and answer session. Our overall sales booking for the development business stood at 11,425 crores, which reflects a year-over-year growth of almost 78%. This was led by another successful launch in our DLF Privana ecosystem. This reaffirms the sustained demand of high-quality products, which are backed by DLF as a brand, and also reaffirms the strength of our core market. The embedded margin from the sales made in the first quarter was close to 4,500 crores. The overall collections for the quarter were 2,794 crores, generating a net cash surplus of over 1,100 crores. We reduced our debt by 1,364 crores in the current quarter, reflecting the strength of our balance sheet. We'd like to reiterate the key KPIs that we monitor remains to be net cash generation and gross margin. The gross margin potential for the sales already made stood at almost 24,500 crores, and for the products launched, including the inventory, is over 40,000 crores. The cash potential from this entire product launch over the period of time is over 46,000 crores. We believe that these metrics enable us to be a very strong and distinguished player in the market and speaks of the embedded potential of the business, which will be reflected in our financials over a period of time. Revenue for the quarter was slightly short of 3,000 crores, 2,981 crores, with a gross margin of 28%. We would like to highlight that the gross margin is a reflection of the product mix, and with Camellias and the DC floors going down, has led to a lower number. Operationally, our embedded margin stands to be very healthy, which is reflected in the future potential, which has been talked about, and this will get reflected in our reported financials as and when the new age projects starts to coming to fruition. Overall, EBITDA stood at 628 crores and PAT at 766 crores, reflecting an year-over growth of 19%. On our annuity side, we have an operating portfolio of 46 million square feet with industry standard on occupancy of 94%. Downtown Chennai received OC in the current quarter, and it's already leased over 99%. We also received the OC for Midtown Plaza, which also we have an over 80% pre-leased. HM OC is expected in the current quarter. The reported rental for the current quarter for DCCDL grew at almost 15% year-over-year and almost 12% sequentially. PAT has had a very, very healthy, robust growth year-over-year, reflecting at 26%. With this, I'll open for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question on the audio bridge may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants on the webcast can click on the Ask a Question tab on the webcast screen and follow the instructions and join the Zoom meet, and click on the raise hand icon in the bottom of the Zoom window. First question is from the line of Akash Gupta. Kindly introduce yourself and your firm name and proceed with your question.
Hi, sir. This is Akash from Nomura. Uh, Congratulations on the great sales performance for both Privana and the Bombay project. Sir, my first question is on your launch pipeline. What's your thought on the launch pipeline for the Goa project? Second, when are we bringing the next phase of Dahlias? And what would be the size of that project? And when are we bringing the phase 2 for the Bombay project? That's my first question. The second question is with respect to your collections. Collections for this quarter were slightly on the flattish side. So, what's your thought on that? Thank you so much, sir.
Thank you. So, Goa, as you've seen, when we mentioned and talked about Bombay, Goa, as and when the approvals come by, we will get down to Goa, which we're hoping they come by in the near future. So Goa will work on that. With regard to the next phase of Mumbai, we've just about come out of the first phase. In fact, I was complaining right now that Mr. Tyagi has not even congratulated me. So, so at least let me take a breather here. So, but Mumbai, we're very excited. I think that we changed the discourse there, and very grateful for the support we got in Mumbai. You all are aware that we did what we did in record time, and we were oversubscribed in our whole in the entire process. So hopefully, I think even if we prepone and do whatever, the next phase will take until next year. So because of the SRA regulations, as you are aware, but Mumbai has given us great belief and things. So we will come to Mumbai as soon as we get all our approvals. That's for the second phase. Dahlias, the main launch in Dahlias is sometime in March, April. The main launch, which with the experience center and everything, but that doesn't stop us from doing. We are still in demand. We are taking this call. We had completely got out of the market, but I guess there are a lot of friends and family references that are coming for Dahlias, and I think our approach will be to kind of meet them and take this forward for Dahlias as well. So I think that's as far as sales is concerned. This is how we're going to be approaching quarter, let's say 3 and 4. And as far as the collections are concerned, be rest assured, there were some delays in construction, and therefore, I mean, because of actually weather conditions and all that, so some demands couldn't go out. But let me just tell you, most of these demands or the monies are in the tune of almost about 80 to 90% received. So maybe just about 10% demands which got withheld because of certain conditions, which are going in or are in the process of being sent right now. So that will then take care of that particular thing also.
Got it, sir. Thank you. And sir, my next question is on the DCCL front. DCCL rental income was up by 15% in the quarter. I just wanted to know your thoughts. What drove the DCCL rental income growth this quarter?
So the rental income growth, if you please allow me to explain to you on an annual basis, that will probably be a little easier. See, from the existing portfolio, the rental growth is between 7 to 8.5% or so. But we have put in a framework in place where we want the growth to be in the mid-teens year after year. And for that, the balance growth from 7-8% to the mid-teens comes from the new assets that come into play. And the total growth will be, if you look at year to year, of about 15% odd. There'll obviously be variances from quarter to quarter depending on which assets got completed and where the rentals commenced in a particular quarter. So this quarter, we had the benefit of the last quarter, we had the occupancy certificate of Downtown 4 Gurgaon. And this quarter, we had the occupancy for Downtown 3 Chennai. But the rentals for both these will commence sometime from September, October.
I see. I see. Got it, sir. Thank you so much and best of luck.
Thank you.
Thank you. Next question is from the line of Puneet. Kindly provide your company name and proceed further with your question.
Hi, this is Puneet from HSBC. My first question is with respect to the income recognition. Can you talk about what all projects were recognized in this quarter?
Yeah, Puneet, the OMT project in Delhi and the Garden City Enclave in New Gurgaon, they were the two main projects which were recognized in the current.
And so primarily the OMT is responsible for lower margin. Is that how one should look at it?
Yes.
Okay. And secondly, if I look at the consolidated sales number for One Midtown, it seems to be a negative number. Is there a cancellation here?
See, One Midtown, what happened? It's not cancellation, but what has happened in One Midtown is that people have upgraded from 2 bedrooms to 3 bedrooms and 3 bedrooms to 4 bedrooms. So that is the variance. The variance right now that you see is because of that. So what you do is generally when let's say a couple of people, not couple, a lot of people had taken two apartments and they have now upgraded to one large apartment. So the other one has come back to us, but that will be sold at the present premium. Whereas at that point in time, these were about almost 3 years back. So we've got a very healthy margin in each one of these. So they're not cancellations, they're upgrades.
Because when you look at the cumulative gross sales last quarter, it was 4,112 crore. This quarter, it is 3,980 crore. So a negative 132. So that's what I was wondering.
So what happens here is that because people had upgraded, we'd given them the option. So area to area, they had the same value. It's only the additional area that they paid for. And this has been our practice since the Camellia times and all. So there's nothing.
So Puneet, I mean, just to refurbish what Akash is saying, people upgraded from, they're taken 2-3 bedrooms, they upgrade to say a 4 bedroom and in the process releasing. So I think about 25 odd apartments have gotten released, which is reflecting in the negative sales in this quarter in OMT. And this, I'm sure, with the demand should be more or less done in hopefully the following quarter, if not latest in the next quarter.
Okay, fair enough. And second, on the construction run rate, while you did talk about, environmental related issues, weather related issues, what is the level of construction spend one should pencil in for DLF residential business?
So we had almost 750 odd crores spent, which was almost same or slightly higher than what we possibly spent in the last quarter, which is always the peak. I think you can safely assume a number which is this slightly going up over the next 2-3 quarters or so.
Okay, and collections should primarily follow with those construction spends.
That's correct.
Okay. And lastly, there is also some bit of Vivad Se Vishwas recognition. Is there more to go, or is it just for?
No. This was just the same one that was declared in the Q4 of last year. One particular form, by the time it was delivered to us, it was the first week of April. So it was actually the money was paid in the first week of April, even though all our applications had been done, I think, in January or whenever they were done. So it is the same family of Vivad Se Vishwas which we have disclosed last quarter. Cash flow wise, one cash flow overflow into the April. That's it.
Understood. And lastly, on just DCCDL, when I look at cash flow statement, the finance cost has gone up while your net debt has gone down on a Q-on-Q basis.
So I think it's got to do with the capitalization of assets. So since Downtown 4 Gurgaon and Downtown 3 Chennai got capitalized, one in March and one in April or early May, the interest then goes to the debit. But if you observe, just 1 second, please. If you please observe, our net debt levels have gone down.
Yes. So I can see no material change in the finance costs as per P&L, but an increase in finance costs as per cash flows.
Absolutely. And not only that, I must say that last quarter we were graded AAA by ICRA. And if you may recall, we are already graded AAA by CRISIL. And we were able to bring down our borrowing cost on the portfolio, which at an exit level is at 7.7% now. And we plan to continuously keep improving upon it.
Okay, that's helpful. Thank you so much and all the best.
Thank you. Participants may click on the raise hand icon to ask a question. Next question is from line of Praveen Chaudhary. Kindly provide your company name and proceed with your question.
Thank you. My name is Praveen Chaudhary from Morgan Stanley. Hello, Tyagiji, Khattaji, Akashji, and Badalji. Congratulations on great quarter for pre-sales of Privana as well as Mumbai launch, and also big growth of 26% in the rental business profit. So very good quarter. I have the same question that I always ask, which is, what's the use of so much cash that you're generating? So if Badal can provide us in the next 3 years, how much cash are we expecting from DP business? And then if anyone else can tell us, where will we use this cash? Because my calculation of dividend growth is not enough to use all the cash. So that's the first question. And I had second question on Mumbai project. The fact that it has been very successful, and obviously we will do phase 2 as well. When should I expect or investors expect you to announce another project in Mumbai, if ever? Thank you so much.
Hi, Praveen. If you look at, I think our overall cash balance is around circa 10,500 crores, of which almost 8,000 crores is sitting in the RERA account, which cannot be taken out per se, and it's not free for use. 2,500 crores is sitting as cash balance right now, where there is a significant amount of dividend payout, which is going to happen in the month of August itself. So while technically at this particular time, I don't think so we have significant surplus cash, but yes, the way the projects are being kind of envisaged and the way it's planned over a period of time, yes, the company is going to generate a fair amount of cash, but you'll have to appreciate that a significant amount of that portion will always be locked into the RERA account till the time this is completed. So I think for the next 1.5 years or so, it may be premature for us to kind of think of extreme surplus cash available for any other alternate use as an organization, while as an embedded margin, the cash will be available to us as and when the project is going to get consumed. Secondly, on the dividend, I feel that we have a very positive trajectory. Over the last 5 years, we have continuously increased the dividend. And as and when more cash is available, this trajectory may change. So I would say that next 1.5 years or so, we'll have clear position on the excess cash available, which is available for alternate use. And I think we should be kind of those things at that particular point in time.
Praveen, really, it will only be, I'd say, about 24 months from now, when Arbor sort of hopefully hits completion, that this entire cycle of the inflated RERA balances will start, significantly moderating. And that's where, the book cash will actually become sort of, actual usable cash. And that's where, frankly, so we'll have like about 24 months to figure out what to truly do with the real big quantums of cash that could be available from then on, in that sense. And tab tak, obviously, the dividend will keep on increasing. Secondly, obviously, as you know, dividend is a function of two things. One is the cash available, and B, obviously, is the DevCo profit recognition, frankly. And I'd say for the next 18 to 24 months, till the new generation of high-rise projects hits the revenue recognition mode, the growth in dividend will be there. I think it's been a very impressive growth. and it will continue at a very good pace. But possibly 2 years later, I think these paradigms could shift significantly.
There was a question on Mumbai project.
Okay. So Mumbai, look, the phase 1 is done. For the phase 2, we are commencing the slum rehab construction now, and I think hopefully in the next 12 odd months we should have the approval level for the next phase of 1.2 odd million square feet to be made available to Akash. And so this will keep on chugging along at the rate hopefully of a million odd square feet every 15 months or so. This is our projection. I mean, to your second question, that would there be a second project in Mumbai, and if ever, I think, I mean, clearly we are open to a second project in Mumbai. We just have to figure out the right project and everything. As we have mentioned in the last many quarters, this was our first tentative return to Mumbai, and I think touchwood, the phase 1 has gone off very well. So I think it clearly gives us more confidence. I think hopefully in the next 12 to 18 months, we should get even greater confidence of Mumbai. We also settled our one old dispute that we had in Mumbai. So I think clearly, hopefully, Mumbai, the geography should grow, but just be slightly patient with that.
Thank you very much, and congratulations again.
Thank you.
Thank you.
Thank you.
There is something.
Next question is from the line of Kunal. Kindly provide your company name and proceed with your question. Kunal, requesting you unmute your line and proceed with your question. Due to no response, we move on to the next participant. Next question is from the line of Pritesh Seth from Axis Capital. Please go ahead.
Yeah, am I audible? I think I am, yeah. Yeah. So thanks and congratulations for the great quarter. First question, in terms of launch plans, any changes for our project launch planned in DLF City, that is probably Hamilton Phase 2, IDEO, or all of these projects would largely be FY27? That's my first question.
Yeah. So right now, we are working towards whatever guidance we've given you all. I think we're first working towards that. Launches take, as you know, in DLF, there's a lot of planning, especially on product. And I think that is what takes time. So I don't think we'd like to compromise or circumvent that procedure. As far as the projects that you mentioned, they are slated for FY27, and I think we will stick to that unless something changes or things are done. But as per plan, right now we've got whatever we have committed. Let's do here and there. Areas itself is, as you know, a 40,000 crore turnover. So a lot of work and effort and time is going into that. And of course, whatever else that we've done, we've committed, we'll be finishing that for this year.
Sure. And Akash, congrats for great response on the Mumbai launch. If you can highlight on the demand, which facets of the geography segment this demand came from, and how do you see this panning out for the second or future phases? Any change in mix from what we saw in the first phase to second phase you envisage for our Mumbai launch? Yeah.
Yeah, no, thanks for this. So yeah, Mumbai, I think business came from all over. In fact, I was told that Mumbai doesn't even shift PIN codes, but we had business from South, we had business from all over. We had a massive broker support in Mumbai, who kind of brought in business from everywhere. The DLF brand prevailed, the product itself. I'd done an analyst meeting there at site, so most of you had come there. You know how good the product is. 50,000 square feet is just the clubhouse. And with DLF's track record of service and hospitality, most of the customers were thrilled to have a facility like this. So I think what prevailed there was definitely a very solid futuristic product. Very, very thought after. People loved the balconies. People loved every attribute of what we had to perform, what we had to present there. So that was very heartening to see. I was also told that Mumbai takes time in selling and it's flow wise and everything else. So that confidence that the public at large and the customers gave us, really, gave us a lot of strength. Our centers almost literally, I mean, we used to pack up late at night and get back there early in the morning to kind of get everything going. So great response in Mumbai. With regard to the other demographics are all CXOs, CEOs, entrepreneurs. We got 20% of our businesses come from NRIs, which is our regular trend in any of our launches that you may be tracking and seeing. And these are the Mumbai NRIs we're talking about. Also, some of the other brokers all across the country contributed, but they brought in people from Mumbai and around. So I think the Maharashtra business prevailed. So it was an 80-20, and that's where we were. Pratish?
Got it. And just one question for Sriram sir on the SEZ occupancy, which is 87%. I think big opportunity for us to improve this going ahead and have a scale up in terms of our rental portfolio. So how we expect the trajectory to be in terms of the SEZ occupancy?
Okay, so let me first put the opportunity in perspective. You would have seen that we have a overall vacancy of about 6% in volume terms, but in value terms, the vacancy would contribute only to 4% of total income. So that's one part. Second part, in an SEZ, as you know, that the SEZs are going through a transition at the moment, where the government has allowed certain portion of the SEZs to be converted into non-processing areas and then leased out as normal commercial space as per the license allotted to that particular plot. So we are in the process of doing that, and we believe that this 13% will slowly come down, but I do not think it will come down in the next quarter or two. It will take a few quarters for it to come down. The process itself with the government, where you have to get the approval from the unit area commissioner going right up to the board of approvals in Ministry of Commerce, is a 4 to 5 month affair. Having said that, we have seen one more trend, that the non-processing areas which are converted in North India seem to be getting a better rentals compared to the SEZ areas. But in the southern SEZs, we are not seeing that. The rentals typically remain the same for SEZ and non-SEZ areas.
Got it. That's helpful, and that answers my question. Thank you and all the best.
Thank you very much. Next question is from the line of Abhinav Sinha from Jefferies India. Please go ahead.
Hi, so congrats to the team on strong set of numbers. Sriram sir, just a follow-up. So I understand that straight lining for the Block 4 Gurgaon downtown would have started last quarter. Did we start for Chennai this quarter, or it is in 2Q?
Yeah, so the OC for Downtown 4 Gurgaon came in the month of February, and the spaces were handed over to the tenants. I expect the rentals to commence from next month, and then right up to November, December, when the full 100% rentals will start coming. The OC for Downtown 3 in Chennai came on May 4th. However, we had worked out with the largest tenant there, which out of 1 million had taken about 740,000 square feet to start the fit outs after the fire NOC came in November. The good news is that the rental for that 740,000 will start from 5th of August, which happens to be today. The balance 400,000, the